Hey everyone, welcome back. It's Kyle Olson here with Great Gray Group. Here is the Q2 2026 market review. After a challenging first quarter, we saw broadly positive performance across equity and fixed income markets this quarter. We hope you can use these insights in your quarterly meetings with your clients. So starting with the big picture, global equity markets posted double-digit gains in Q2 and fixed income markets were positive for the quarter. U.S. equities returned 15.4% as measured by the Russell 3000 index, with a year-to-date return of 10.9%. International equity returned 14.5% for the quarter and 13.7% year-to-date as measured by the MSCI ACWI ex-US index. Fixed income returned 0.7% for the quarter and 0.6% year-to-date as measured by the Bloomberg Barclays Aggregate Index. The unemployment rate ticked down slightly to 4.2% from 4.3% at previous quarter end. So looking specifically within the U.S. equity markets, large cap growth outperformed large cap value on the quarter by about 280 basis points, with the Russell 1000 growth returning 16.7% versus 13.9% for the Russell 1000 value. In small caps, growth also outperformed value by a wider margin of 850 basis points, with the Russell 2000 Growth Index returning 25.7% and the Russell 2000 Value returning 17.2%. The Russell 2000 Growth was the best performing U.S. equity index for the quarter at 25.7%, and the Russell 1000 Value Index was the lowest performing at 13.9%. Looking down on the chart here on the sector side, information technology was a standout performer, up 32.3% for the quarter, followed by industrials at 15.3%. On the other end, energy was the weakest sector this quarter, down 12.9%. In our view, this reflects in part a moderation of some of the geopolitical pressures that drove energy higher in Q1, though multiple factors may have contributed. Looking internationally, the emerging market equities posted a positive 24.1% return for the quarter as measured by the MSCI Emerging Markets Index, with a trailing one-year return of 43.5%. Developed international equity markets returned a positive 11.1% for the quarter as measured by the MSCI EFA index. For the trailing quarter, emerging market stocks outperformed developed international stocks by 13%, and over the trailing 1 year, emerging markets outperformed developed international markets by 22.7%. In our view, the continued strength of emerging markets relative to developed international markets is a meaningful data point for advisors thinking about diversification conversations with plan sponsors. And looking at the fixed income side, the broad U.S. fixed income markets returned a positive 0.7% for the quarter as measured by the Bloomberg Barclays Aggregate Index. The best performing sector for the quarter was high yield corporate bonds at 2.5%, and the worst performing sector was government bonds at 0.3%. Fixed income managers believe that strong economic data and persistent inflation contributed to markets scaling back expectations for the Federal Reserve rate cuts, putting upward pressure on Treasury yields. And taking a look here at the asset class kaleidoscope, this chart does a great job of illustrating just how quickly asset class rankings can change from year to year. This quarter, small cap value moved to the top of the board year to date at 22.99%. And of course, the balance index, as it is intended to do historically, avoided the extremes on both ends, which in our view continues to reinforce the case for diversification. And now for the chart of the quarter, and this one is particularly relevant for plan fiduciaries. The SpaceX IPO on June 12th, 2026 raises an important question for defined contribution plans. Which index funds in your lineup hold SpaceX and when did they add it? The answer varies depending on the index. Total market and the NASDAQ 100 funds gained exposure within weeks of the IPO. The Russell 1000 added SpaceX around late June under its fast entry rule. The S&P 500 funds are not expected to include SpaceX until mid-2027 at the earliest due to seasoning and profitability requirements. At entry, SpaceX represented a sub 1% position in broad diversified funds, so the immediate impact is modest. But in our view, understanding which funds hold it and when is a timely and important conversation for plan committees to be having. This slide is for informational purposes only and not investment advice or a recommendation. So to wrap up Q2 2026, global equity markets posted double-digit gains. Growth outpaced value across both large caps and small caps. Emerging markets had a strong quarter. Fixed income was modestly positive. and the SpaceX IPO introduced a new index exposure worth discussing with plan fiduciaries. We believe fundamentals remain relatively solid heading into the second half of the year, though near-term volatility may persist and individual plan circumstances vary.